Thanks very much, Arvind. I know it's been a tough situation for you to join us, but we appreciate you taking out the time. Is Greece giving you sleepless nights?
Actually, no. I think that the Greece situation is a bit of a tempest in a teacup. First of all, let's recognize one thing. The Greek government has abused the European leadership, the European Central Bank, and the IMF in terms which in any normal situation, people will stop talking to each other. The fact that the IMF, ECB, and the European leaders are still desperately trying to reach a deal should tell you that they have no interest in seeing Greece leave. Not because, and this is an important distinction, not because it's going to cause significant turmoil, there's Greek exit is going to cause big upheaval in short-term financial situation for the European Union or for any of the countries, but because it calls into question the long-term idea of European integration being a one-way street, and therefore it calls into idea the whole European integration project. So I think that let's be clear that the short-term fears are overdone, A, because both sides have high desire to make a deal, including the guys who are acting tough, the lenders. The Greeks obviously played their hand to as far as they could, but eventually are trying to find a common ground because they also don't want to be pushing this so far that there's an accident and they get left with some kind of a Greek exit. But the reality is, even if there is an accident and Greece exits, I don't think it's going to result in anything more than more significant QE from ECB. And if that's what it comes out to, notwithstanding a short-term sell-off in markets, I think that'll be a great buying opportunity for India and for other global markets that may sell off on that.
So my question is, even yesterday's comments haven't perturbed the markets too much, Arvind, because there was a statement immediately which followed which said that there will be a reverse proposal or a new proposal that will be sent to the Greeks. What do the markets do in the intermediate term, you think? Are markets generally fairly confident that some bit of deal or some bit of compromise will be reached?
I think the markets are confident either a compromise will be reached, or if a compromise is not reached, then in any case, it's not going to cause significant economic ripple effect on global economy. So I think the markets realize that, but there's some uncertainty, there's some risk, and so the markets have taken a little bit of a breather, but the breather is very small. But I think everybody's come to realize that notwithstanding all the noise and heat generated, heat and sound and light generated from this negotiation, eventually both sides are too scared to walk away. And let's also make one thing clear. It's unlikely that any deal done will be done in time for the IMF to get paid on June 30th, but it doesn't matter. Because if the deal is signed, the IMF is not going to pull the plug on it, and they'll make some clucking noises, but will allow some grace period. So I think that, it's kind of one of these shadow boxing going on, where the eventual outcome the market correctly perceives is likely to be a deal. But, there's a 25-30% probability that something falls apart. So my view is a 70-75% probability that deal gets done. But in the 25-30% case, even if the deal falls apart, I don't think that causes major global upheaval. It causes some short-term risk off, but I think any economic effect of that is likely to be very limited, because ECB and I suspect the Fed would be much more inclined to be more dovish if that happened, just to calm down markets.
I get that point, Arvind, but I think, when you read a lot of the articles which are doing rounds at this point in time, there is also a sense that a fallout would not only have economic impact, but it would have political ramifications as well for the region. And I think to that extent, while you're putting a probability of 25-30% of a no deal situation, but a no deal can then that situation can then get exaggerated and mean that in that uncertainty the market adjusts a bit more. Could you qualify what would be the short-term impact on markets across if a no deal situation comes by?
Well, if a no deal situation comes by, I think you could see global markets sell off, 3 to 5%. So, I mean, emerging markets sell off 3 to 5, maybe a little more. But depending on the situation, I don't think it's going to be more than 5%, because what you're going to have very quickly is the central bankers step in, and the global markets are used to the drug-induced high of more quantitative easing from central banks. So if you see more aggressive offsetting quantitative easing, people will go back to the liquidity argument, trumping any short-term concerns. And let's be clear, the political fallout from Greece leaving, in terms of the effect on the Eurozone, is not going to be to cause the European economies to suddenly start contracting. The political effect is going to play out long term. We saw a statement from Marie Le Pen in France, who's leading in the polls for the next presidential election, which is not for a while, talking about a French exit. So, it emboldens people who are Eurosceptics, and that's kind of that implications are more 2, 3, 5 years. I'm not sure that the market's suddenly going to discount that the Eurozone is going to have some more exits, and therefore, what does that mean for stocks today? Maybe it does, but my assumption, my central case is that if Greek exit does happen, you get knee-jerk pullback, you get the central banker stepping up, and that creates a buying opportunity for equity markets. So the sell-off is likely to be short-lived, and the economic ripple effects from a Greek exit are likely to be quite limited.
Do these stories interest you at all? I mean, a BHEL is an example of a cap goods player, but cap goods stroke infra. I mean, we are partnering Edelweiss in their infra conference too today, and a lot of people believe that these prices will not come back once the investment cycle kickstarts in the next 6 months.
Well, I mean, I think there is going to be investment cycle and there's going to be investment cycle. So, taking the power equipment sector as an example, the PLF factor that came out, in the last few months has been at abysmally low levels. So we have a strange situation of a country that is significantly power deficient, and yet plants are operating well below capacity because the state electricity board and the discoms don't have the money to pay for the power, because they lose more money the more they buy. And keep in mind that this is all interlinked, that the PSU banks have been told not to make bad loans, and so are not making as many loans to SEBs anymore. And they have their own balance sheet constraints why they can't do it with all the bad debt that they face right now, and the lack of having enough capital to be able to continue to lend in terms of not being able to raise capital. So I think all of this is intertwined. So I don't see, maybe BHEL is a special situation that they're going to keep building no matter what. But in general, new power plant construction is not one of the areas that we are particularly excited as one of the stars of what's going to lead us out of this current, slump that we are in. I think that some sectors like road are areas where we are seeing signs, and we're quite optimistic of seeing many more signs of construction projects. So, companies exposed to that. Another area that we're very excited about, which doesn't get much attention, is the mining side. Coal India is clearly making great progress in terms of increasing its production quite rapidly, and that's requiring equipment, and that's requiring, commercial vehicles. What is not often talked about is that some of the legal hurdles on iron ore mining are slowly being removed, and as that's happening, iron ore mining is starting to pick up and is on a significant upswing over the next couple of years. There could be meaningful, 40-50% growth in iron ore output or iron ore exports, and that would mean that sector will also, require mining equipment as well as trucking, commercial vehicle demand. So I think there are areas where we see much more solid fundamentals, which could drive. Which are driving and could drive further improvement in demand, and could start at least, if that capex cycle in those sectors could provide some impetus for some sectors, which we find more interesting, people who supply equipment to those areas. And then that should, you need a few things to start the positive cycle rolling.
Right, Arvind, completely running out of time, and I know it's a late night for you too. Quick view on Reliance Industries and OMCs. Do you think they're getting into a bit of a breakout zone?
Well, I think that Reliance Industries is one that obviously has been a huge laggard in the last couple of years. But I think that as you get closer to completing some of the major capital projects, and maybe people are getting a little more comfortable about their telecom investment, having some vision, a better understanding of the vision. So all of that helps. OMCs clearly have done a great job in terms of the government has allowed them to raise prices as oil prices have recovered. So maybe that whole under recovery period is behind them, and if that's the case, then those companies are still relatively reasonably priced, so therefore represent value. I remain somewhat cautious in general about PSUs, but OMCs might be one area where the laggards have enough value in it that could be interesting.
Thanks a lot for that, Arvind. So good having you, and all the best for
Thanks.
Tonight and tomorrow as well. And thanks so much for joining in despite what's happened. Thanks a lot.
Thank you.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.